Good evening, legends and legendettes. In this brief update, I'm just going to give a quick market overview and just my current positions and what I plan to do next. So, looking at the Bitcoin chart, of course, it doesn't take a genius to work out we've been in this sideways compression here, somewhat like a symmetrical triangle. And, of course, before I go to the wider analysis, I want to just address certain misconceptions as well. So, of course, I'm not a huge fan of pattern trading, and what I actually found out is that in the long run, across many years, it actually has a very low win rate. I in general don't take patterns that seriously, but I do appreciate them. But the ones I'm more interested in are more ascending and descending triangles. But this specifically is a symmetrical triangle. And very often you have got a compression banging on at the top support resistance line and the bottom support line. And so of course we've got touches here, and we've had a couple of touches in the lower band as well. But one key thing that not enough people talk about is paying attention to the volume. And so this is the volume here. And a major key thing that actually happened was we had this push down like this in volume. It's very, very typical, actually, because you've got compression price action, and the volume just initially is above the weighted moving average, and then gets lower and lower and lower and lower and lower. And then once you get a breakout, in this specific situation, you've got a huge increase in volume like this. And in this specific situation, it was like 5 to 6 times more than the actual moving average. And so this really indicated to me that it was very likely an actual proper breakout rather than a fake one. Because if it was a fake one, then I wouldn't expect this much high amount of selling pressure in volume. And so if it was a lower volume, then I might think, well, it might break out and then fake out a lot of people and go back into the actual triangle. That was just something interesting, how it was, of course, many people could not cope with this. And very often, these situations like this, it really forces you into taking bad trades. And sometimes it's okay to just sit back and do nothing and wait for high probability setup. So what next? What to expect next? And so as of right now, we've obviously broken out and we've had some various imbalances here. Okay. And so perhaps you could get some kind of recovery of that. But I think a key thing to really bear in mind is the volume. And of course, here was a huge amount of sell volume here. And so I'm just going to draw Fibonacci from this recent local peak. Okay. So I'm just going to use a zigzag to indicate this was the recent kind of 1 hour high. So if I draw Fibonacci from this point to the recent low here, we of course we've gone up to the 382, but sometimes what I find is that of course a lot of people are waiting to put limit short orders in the 61866 that a lot of people like. Sometimes the problem is that when you've got a huge amount of selling pressure, the bears are so much in control that you just might not get the opportunity to go back to the 66. And so it really depends. If the selling volume isn't as strong, you might get enough of a retracement. And so far, it does seem that the bears have control until proven otherwise. But of course, we should not be so bearish. As of right now, I'd be a bit, unless your style of trading is you're going on quick in and out scalps. In terms of swing trades, I personally am not interested in any shorts yet, because we are at a support level. So I'm just going to get rid of this in the meantime. So of course, we've been dancing along this, pretty much the sideways channel for like a really, really long time now. An interesting note, of course, is that we've had this roughly this key 26.5k level. We've got a wick below it and a wick back up. It is somewhat like a mini false break, but based on other metrics, which I'll talk about further, I haven't actually opened any positions yet, any more positions. I have my hedge short, of course, from 28.5k and 28,592 as well, but I've closed off 50% of the profits among both those shorts, those hedge shorts, at 27,500, 27,100. And 2660, and the remaining 50% I'm pretty much leaving as a hedge swing short. And of course, I still have my hedge long from 27,100, and I got this after this liquidity grab last week, and so I've closed off 50% of that. Actually, I closed off 50%, but then I closed off more in the second run-up, so I have 30% remaining of that hedge long. And so both my hedges are now in risk-free positions. And this is the importance, right, guys? Like, nothing lasts forever. It's important to pay yourself. Like, we went up here, and it's very easy to get sidetracked and thinking, oh, we're going to go 30k. And that's why I take partial position profits, but I also leave some to run. And so I'm in a situation where my remaining of my risk-free hedge long could get stopped out, but my stop loss is just slightly below this. And so it's getting closer and closer, but that's fine. If I get stopped at the remaining risk-free trade, then my two hedge shorts benefit, right? This is the way I've played this. And so just going to draw a fixed range in this particular range. So we pushed up here, so we found roughly some support here. I'm bringing it to the region before the breakdown, okay? Why I'm hesitant to short this is that, look, the thing is that we are at it roughly, of course, the value area low has recently pushed down, gone up now, because obviously it's 27,300 in this range, but before it was 27,100. And so we are near really a support level. And so as of right now, I get a high time frame closure below 26,500, I do believe it was still range bound. Of course, I would expect also some kind of an attempt of potentially of this recovery of these imbalances here. And so I don't think it's the highest probability setup in terms of shorts. Of course, you might have intraday scalps here and there, but I'm very selective of my trades. And so we've got a couple of options right here. So of course we could gain acceptance back into the value area low. So this lower extremity of this high volume area, this zone here, it's kind of this fair value zone in terms of volume. If we get acceptance and retest, of course, then it's likely we're going to go back here 28.2 potentially, and potentially as high as this region here. A certain other situation, of course, is that we could perhaps, another situation is we could just push up to the point of control and just reject outside as well, just really catching a lot of people off guard. But so far now, it does seem that the bears do have control at the moment. There's different, of course, ways to play that symmetrical triangle, of course, so I'm just going to roughly put that on again. There's different ways to play that, of course. There's a conservative way, and of course there's a more aggressive way, right? So naturally we have this compression here, and an aggressive trader would have just marketed short this, okay? But the problem is you had to be there at that moment in time, and it's very unlikely from the vast majority of people being there at that moment in time. A more conservative trader might wait for a retest. But the thing is, there's never any guarantee, especially with this amount of high selling volume. Of course, I've seen higher sell volume, but there was a huge amount of sell volume, so there's never any guarantee. Sometimes you just have to accept that you might have to let go of this one. Of course, the next thing you could consider as well is just going out of this range. So of course, we've got this range, and once we actually confirm a breakout of the range, potential situation is just waiting for the break of the range and then an SR flip or a retest around this region, and then we can put of course, a lot of people are looking at this 25.2k region, so potentially short the retest if you get that opportunity. And so it's really much about taking one step at a time. I don't limit shorts, I assess the reaction on a day-to-day basis and just see where we go from there. Of course, certain other things to really look at is really the session volume as well. This is like looking at the volume profile in a 24-hour period, and just looking at any other regions, any point of controls that's of interest. Around here, I'm not particularly interested. Of course, I would expect, you would hope for some kind of recovery here, but it's no guarantees, right? But it doesn't mean I want to short right now. Looking at any other zones that we could potentially dump to in the next couple of days. Okay, this seems like quite an interesting region. It's 24.8k. Is a potential region. Of course, it's been tapped a few times here and there, so it's not the best level in the world, but I could see a situation because naturally a lot of people have their eyes on this 25.2k region, so a lot of people would kind of limit longs potentially, so we could kind of get some overshoot, potentially down to 24.8k region, maybe stopping those people out, and then get some kind of retracement. So that's something I'm looking at as well. So looking at the long to short ratio, and of course things have greatly changed as well. Of course, 2 weeks ago we were actually having 60% retail longs, and it just shows how so much changes in the space. Like a lot of people would just randomly look at long short ratio and just take a snapshot value in a moment in time, but it can become very irrelevant in a day's time later. And so you have to realize that a lot changes in the space. And as of right now, it does seem as if, okay, we've got again an increasing amount of retail longs here, okay? So there's a lot of fuel to go downside, and naturally once we've got that dump, a lot of these longs started closing positions. But now, and so it was really highlighted in this open interest. And so now the question is, do we get a creep up of open interest again? And do these retail longs stay stubborn, and which inevitably leads to their demise and a further dump, potentially to that 25.2k region that a lot of people are looking at? You also have to be careful, right? If everyone is looking at the same region, then you can often lead to an overshoot, as mentioned before. The retail top traders They also seem to be net long as well, around 0.53, but again, nothing crazy, right? Like, you can't really take these values on their own. You have to see how it changes, develops with time, really. Of course, looking at certain other key things as well. Of course, we have this rough trend line here. Potentially, there could be a potential bounce region. And of course, I'm just going to draw some key Fibonacci's just to get a better picture, really. So from this recent local low here, and so using the zigzag indicator just to really highlight, so this low around 19.6k, 19.5k before we had this run up. You could draw Fibonacci from there initially. Okay, so from this recent local low. Yeah, so I mean, there's a reason, of course we've already hit the 236 fib, but of course 382 fib is 25.3k. That's of course worth considering as well. And potentially 0.5. We'll just have to really take one step at a time. The 618 is coming around to 23.1k as well, which is interesting as well. Looking at a more global fib, a more macro one. So from the actual lows last year. Okay, so the 236 comes at around 25.8k. So that's something else we can look at as well. And the 618 in this case is 20.6. And so interesting as well is, if you look at this actual Bitcoin price action, you could argue that in some ways we've been in some kind of sideways channel, right? So you could argue this is like a sideways channel like this. The question is, do we get sideways channel here as well? And of course, the risk is, of course, if we continue but get back in here, do we get all the way down here as well? So that's something to consider as well. Or do we just kind of get that initial fake out move, scaring a lot of retail, and they go back up to 32k? So that's something I'm not completely ruling out as well. Of course, we mentioned this last week as well, so looking at the key levels as well. People didn't really take this serious enough, but it really played out so well. And of course, 27.7k was the 2021 actual low. Okay, so if we go to this chart here, we can see, as you can see here, this wick of 2021 here. This was a 2021 low, and of course 28.9k was the 2021 open. So a yearly level is actually one of the strongest levels that you can really think about. And of course, as you go down, the levels become less strong. And so I had mentioned a few times actually the stream, like last week as on the stream, 28.9k is a very key region. If we get through above that, then of course 32k becomes likely. And so I never limited shorts there, but it really played out, really speaking, because of course we were looking at certain other things as well, right? So for example, whilst we were aware of the 28.9k region, of course we had to be really careful of this range here, and around this range here. This was in May 2022. The thing is that last year, if you were around, it was basically a bear's paradise. We had this similar kind of fractal playing out over and over again, right? Dump, bear flag, dump. So even here is we'd have some kind of like a dump, bear flag, compression, and a dump again. So over and over again. So compression, dump. And it's just so cyclical. Going back to this price action, so I'm just going to draw a fixed range, particularly this zone, because this is the best data we have, really. And so we had this dump here, found around support around here, so putting it to before the region of the dump. So we dumped around, so if I put it here, there's a lot of actual confluence as well, I mentioned last week as well. So this is the value area low of this range. So this was around 27.8k. And of course, this was a yearly open, okay? And so of course, last week we spoke about how if you gain acceptance, of course, you'd have a retest and then get to this region here, so 30.8k, okay? Of course, the potential situation, of course, is a false break of this region here, and then a dump, okay? And that's something to always consider as well. So, of course, we got the first situation. We've got the situation of, we went up to 28.9k, and of course, we tapped that yearly level, and we had somewhat of a false break as well. In the most recent price action where I got my shorts specifically as well, we had this somewhat of local peaks here, and we had that false break around 29, and I think I harped on about this so many times, but really watching, people always forget yearly levels. And so we eventually got the false break of this, and we got that liquidity grab, that final beautiful liquidity grab, and tapping this 2021 open. And that's when I opened my short. Back then, if you notice, whilst we had this run up here, I wasn't so interested because it was kind of teasing us, right? It was kind of just teasing us, right? And of course, we eventually ended up losing this 2021 low here, and that itself became kind of bearish because we were doing so well initially, but then we kind of broke out, and then so we've just kind of been dancing around this. Of course, a lot of people looking at this and seeing it's somewhat like a Batman or a bot pattern, some people call it. And do we eventually recover these imbalances around this region, so between 25.2 to 25.5? Of course, a lot of people are looking at that, but always bear in mind the route can surprise you, so just always keeping an open mind. And I think the beautiful thing is that as traders, we benefit in either direction, really. It doesn't matter if the market goes up or it goes down. So looking at certain weekly levels in Bitcoin, nothing has been a particularly interesting note since the last session. Of course, we got 26.5k. This is a key weekly level, and it was also the top region of at one point of the 5-day Gaussian channel. And of course, now the new weekly level, I should be pushing this up a bit further actually, but yeah, it's around this 28k region. So that's like a new weekly level. But apart from that, there's not been major key interest in new levels. Of course, daily levels will have a look at as well. So in terms of daily level, 28.3k. We've had, a fair amount of wicks and reactions of this. Is a fair level. And of course, we've now reached this level of support, 26.98. So this was a demand zone around here on the 18th of March. But we'll just have to wait and see if we actually get a clear closure above this, and whether the bears can really sustain the pressure to dump it down and really clear these imbalances, really. Of course, the monthly level to consider as well. But again, we expect a new monthly level, but it's not really changed because, of course, we're in the same month. Yeah, but now going back to the Gaussian channel, which is becoming more and more relevant, and I keep speaking about it. So this is the Gaussian channel. We called that beautiful short, right? When initially we hit the 26.5k. I actually waited until we went back below this key level of resistance and then shorted from once it was confirmed as a false break, we were back in the channel. But I've actually done some statistics, and looking at the past 5-6 situations when this happened across the last 5 years, very often in the 5-day Gaussian channel, and often Bitcoin breaks out. So we've got a breakout here. And then once Bitcoin retests the top band of the Gaussian channel, okay, so we actually have it a retest. Of course, please appreciate this is a 5-day chart. And so once you get a retest, there's statistically a movement of 30 to 50% from the top band upon breakout and then retest. So that actually puts us back to 32k actually. But it doesn't mean that has to happen tomorrow. It can happen in 10 days, right? The market never lets the majority win. The markets are designed, of course, transfer money from the majority to the few, right? And so it's always just taking it one step at a time. And so the question is, do we get a retest and eventually go back to 32k? That's just something to really see as well. 25k, it does seem, is a potential situation that we cannot completely rule out as well. Something else as well that I look at as well sometimes is BBWP. And of course, BBWP is measuring contraction and expansion. And so if the price action is more blue and this region, then it's more contraction. Okay, it's a volatility measurement. If price is more towards this red zone, then it's more expanded. Of course, you need to combine it with other things like stochastics and to really give an idea of the direction of expansion. But what's interesting is that, of course, whilst we haven't reached 100% here, we reached the 94%, which is a local peak, and that seemed to have been confirmed around the 23rd of March. And it does seem that we're actually cooling off right now. And the question now is, do we cool off eventually and just get a cool off period? And that initiates the dump, of course, to 25k, 24k potentially. And then the question is, do we eventually reach the 100 mark in the BBWP, but with Bitcoin going to 30k? And that's something to really consider as well. So looking at the stock market, and of course, I'm just going to mention, I've shown key levels, of course, as well. We've spoken about this trend line, of course, as well. Of course, trend lines are very subjective, but seems to be fairly respected. We've had touch here, breakout, and then fake out here, and then dump here, push above, and then retest. And of course, when you go in zooming in the lower time frame, of course, we've had a wick above this trend line. We came back in, and the bulls were really able to regain momentum above there. So that's something interesting as well. So in terms of key levels, of course, 3850 has really been a key level that we've really need to regain, really. And I honestly do believe that if we break below 3850, then potentially Bitcoin could get that dump below 25k. And so it's good in the sense that we've really reclaimed 3850. That's something that's really hopeful as well. And looking at the actual fixed volume from a particular zone here, a key area specifically, the point of control was actually around 3850. And so it's nice to see that this was actually a key important level. And of course, if it's an SR area as well. It's nice to see that we've actually initially had a bounce of this key point of control. And looking at a more macro like range, of course, this from a day trading point, it becomes a bit more difficult to really day trade off. But looking at a more macro view of this range, okay, so it does seem that we've had a dump below this value area high in the 16th of February, and we danced flirting around this point of control, but we haven't actually reached this value area low. And the question is, do we actually reach this 3770 region? So that'll be interesting to really look at. And of course, as you can probably appreciate, if we had a dump down this region, a lot of people would panic. And I could see a situation where we go below like this, potential false break back into the range and potential push off back to this region here. Looking at the Dixie, of course, we've pretty much been in this channel for a really long time. And it seems that we're actually somewhat appearing to potentially reach a certain key monthly level. And of course, key monthly level, of course, is around 102. And the question is, do we reach that region? Of course, it seems like we're really itching towards that region. And it seems like now Dixie could potentially be having bounced off the 786 roughly here. So I'm going to draw Fibonacci as well, just to really confirm if I'm right. Yeah, okay, fine, yeah, I am. So we've had an initial wick of the 786, and of course, it was pretty inevitable. We had the push up and a breakout, and we took structure here, and kind of like a false fake, like a breakout, and we've come back in. The question is, do we get a bounce from this region? And of course, whilst Dixie is inversely related to Bitcoin in general higher timeframes like the weekly and all, and general inverse correlation risk on assets, if you remember, the Dixie is related to a basket of fiat currencies, so it of course includes things like the dollar, but of course the euro as well. And so the Dixie is not equaling just the dollar. You'd always be wary of that. Of course, the correlations in lower time frames can really change a lot. And as we noticed during the bank FUDs, and of course during the USDC issue a couple of weeks ago, when Dixie actually dumped on that particular Friday, but also so did Bitcoin and certain other risk on assets. So that's something to really consider as well. looking at Bitcoin dominance, and so drawing a Fibonacci as well. I've drawn it from this particular peak here and to this low here. And it seems that now we're reaching this 886, so around 47%. We haven't actually reached gone over 50% in a really long time. It seems that we're pretty much range bound here, really since 11th of May 2021, just been range bound. So just have to wait and see. Bitcoin dominance is the market cap of the total of crypto that's attributed by Bitcoin. And so just because Bitcoin dominance is going up, it doesn't mean that Bitcoin has to go up. And of course, Bitcoin can go sideways and alts can bleed as well. So it's something to take everything into context as well. And looking at certain other things as well, the total crypto market cap. And it's nice to see that, of course, that we eventually reached that region, which I spoke about a couple of weeks ago, that it seemed fairly likely that 1.18 trillion was likely from the August peak. But it seems like we've initially had some kind of wick and rejection of it initially. And we've somehow seemed to have gone down to the 786 level. Question is, do we go back down to the 65 fib or 618 fib as well? And of course, it's very important to constantly take profits because nothing goes up forever, and it just gives you an opportunity to always take some profit out of the table, take some risk off the table, and really buy back at lower areas. So now looking at the ETH to Bitcoin dominance, and this is always important to consider because recently I haven't really been trading Ethereum that much. I'm mostly just been trading Bitcoin because it hasn't been particularly lucrative, right? Because at the end of the day, it's about gaining Satoshi, and in this daily chart specifically for Ethereum, pretty much been in this downtrend. And so by actually trading Ethereum, I'm actually losing Satoshi. And so when it reaches a key support level or an area potential bounce region, then it might be more lucrative to actually trade Ethereum. And of course, I caught really nice longs in Ethereum in December last year because I was looking at the ETH to Bitcoin dominance, and of course it reached a key support level, and so I mostly traded Ethereum. And once the dominance kind of became more favorable towards Bitcoin and less favorable towards Ethereum around this peak, I actually got rid of my ETH longs and just focused more on Bitcoin trading, because at the end of the day you need to gain Satoshi, right? Like your trade might go up or your investment might go up in terms of actual numerical value, in terms of dollar value, but you might be losing in terms of Satoshi relative to Bitcoin. So that's something to really consider as well. The questions are, is this some kind of wedge, and do we eventually get a breakout of this ETH Bitcoin dominance as well? And on that note as well, just looking at the Ethereum chart, it has been somewhat disappointing actually compared to Bitcoin. Because as we mentioned, so this was the August peak around 2032. And despite Bitcoin almost reaching 30k, we reached around 28.9, and so we far actually exceeded the Bitcoin peak in August. So the Bitcoin peak in August 2022 was around 25.3k, but ETH itself hasn't been able to even reach that. It's August 2022 peak. We're still kind of floating around this region here, and we've broken out of this weekly level. We come back down here. Question is, do we get a retracement to this 1511 region, which is definitely possible if Bitcoin does get that breakdown to 24, 25k region, if everyone's itching for, and just certain other key levels I'm really looking at as well. If we actually do claim this 1780 to 1800 region of Ethereum, there's actually very little in the way to 2000 from just past experience of trading Ethereum. Yeah, guys, that's all I have to talk about really today. I just have to really see where this Bitcoin price action goes, really. Do we actually gain acceptance into this value area low around 28.9k and then push on to 32k? Or do we actually get a situation where we just break down like this, here, like this to key Fibonacci? And of course, if we break down and we stick in this range, there's of course a chance of new lows, right? Potentially like a retracement, new lows. And of course, I'm going to take like a macro volume control fixed range as well. So just looking from this support region here to point roughly here. So of course, potential situation of course could be if we do come down and break down like this, do we eventually get like a retracement to the point of control and then two new lows as well? That's something considering as well. Or potential situation could be break down this channel here, retest, and then maybe push up to 32k as well. Or we could just be in a new range here in this between this region here, so potentially like this. So that's just all these things I'm looking at. That's something to consider as well. There's so much that can happen, and it's just, of course, we've got so many news events this week as well. Well, guys, thanks a lot for watching, and do check out my YouTube channel. This is where I post market updates and just my passion for crypto and trading and really speeding your trading career, really. Well, guys, thanks a lot for watching, guys, and I'll catch you in a bit.